Listen, here's why your federal tax refunds may be bigger than usual. And really, what I want you to understand is you have more control than you think you do as it relates to making your refunds bigger, legally, ethically, and morally, regardless of what I'm about to share in this video. Now, before I share what may make your refunds bigger, I first want to show the dates that you may be likely to receive your refund. That way you can plan accordingly. So here are the estimated 2026 IRS income tax return, basically based on if the IRS accepts your e-file return by the date on the left, then the direct deposit refund may be received as early as 10 business days after the e-file is accepted. So if you look on the left, you'll see the dates that if they accepted it by, then you'll likely receive it on the date on the right. So January 26th, if you file day one, then you're likely to receive your refund by February the 6th. And get you a screenshot just so that way I don't have to read each and every one. But you see all the way down to March 9th, March 16th, March 23rd, you're likely to receive it on April 3rd. And some of these are a little different because in order for you to receive your credits, such as an earned income tax credit or child tax credit, it has to be delayed slightly just so they can basically approve that you officially earned the credit or qualify for the credit. But look at these dates, get your screenshot, and then you'll know when you're likely to expect it. That way you can say, okay, I plan on receiving mine. I want to receive mine by this date. Well, you want to at least file and have it accepted by the date that's on the left. So hopefully that's helpful to you. Now, let's talk about why your refunds may be bigger and what you can do about it to control it, regardless of the things I'm about to share in this video. So some of the things that they say as it relates to the tax filings, what may make your refunds noticeably larger, assuming nothing significant has changed about your financial or family life since 2024, is basically tied into some of the tax codes changes. So the average refund paid out last year was $3,167 through December 26 per IRS filing statistics, and the Treasury is now projecting tax refunds will increase by an average of $1,000 this year per household. The question is, why is that? Well, the two main reasons: Congress made a number of new and expanded tax breaks effective for the tax year 2025. And number two, most people did not adjust the tax withholding on their paychecks last year to account for the changes in their tax breaks. What does that mean? You see, people think that the refund means that the government did them a favor. Most of the time, the refund just means refund. Again, money. You getting your money again based on your overpayment of your taxes. So many people are overpaying taxes, not pay their fair share, overpaying taxes. And this happens when their withholdings on their paychecks has not been adjusted or properly filled out. We got tons of videos where we talk about the W-4 and how adjusting the W-4 can pretty much show you how to bring in an extra $200 to $800 per month and keep you from overpaying in taxes. But you also got to understand that some people live off the fact that they can get a refund, so they don't mind overpaying throughout the year. But this is what I want you to make note of. Congress made some changes to the tax breaks, but you can make your own changes to your own tax breaks in your own life every single year. What do I mean? Well, if you have something that's generating income outside of a job, then you qualify for tax deductions. Say you work a full-time job, but you also have a side hustle, a side business, a side gig, something that you operate from your home or something that you operate from your phone. You now qualify for tax deductions. So don't just get that side business, side hustle, side gig and think that it's only about how much money you make. No, this can help you offset your tax liability based on money you've already spent. And oftentimes it's things you're going to spend money on anyway. Let me ask you this question. Are you going to pay your phone bill anyway? Absolutely. Are you going to pay your internet anyway? Absolutely. Are you going to put miles on your vehicle anyway? 100%. Are you going to do things like feed yourself anyway? Absolutely. What about travel? Are you going to incorporate that into your year to year? For most people, absolutely. Why am I asking you these questions? Well, these are things that you're going to do anyway. And if you're going to do these things anyway, why not try to make these things tax deductible? See, that's the beauty in tax deductions. If it's ordinary and necessary for you to do certain things in order to operate your business, then you qualify for tax deductions as long as you're pursuing a profit. Now, get with your tax preparer. This is not financial advice and not just a tax preparer, tax strategist, somebody who understands the tax code and is using the tax code, not just talking about the tax code or doing it when the year comes around and it's time to file taxes. Because for those of you who are in the gig economy and you're driving and doing certain things to make money using your vehicle, then you should be writing off majority of your miles. And that gives you over 50 cents per mile. So for every 2 miles you drive, that's $1. Well, many people drive 10,000 miles plus. So that's over $5,000 in the form of a tax deduction that can lower your tax liability. In some cases, it can lower the tax bracket that you're in. And in other cases, it can cause you to get a larger refund. And that's just one of hundreds of tax deductions that you qualify for. Well, meals. If you're out and you're doing your business, and you're also eating meals, then those meals become tax deductible. And we're just talking about the driving gig economy. We haven't even got into e-commerce, where you may have to pay for certain memberships or services or trainings or, certain software. We haven't even got into the content creation where people are leveraging social media and trying to get social media to send them a bigger check every month. And now, because they're a content creator and they're posting more frequently, posting more strategically, the things that they post about can position them to make their lifestyle tax deductible legally, ethically, and morally. So as a content creator, the world opens up to you because everything is content. This positions you to make your food tax deductible if you incorporate that into your content and it makes sense for what you do. And if you're strategically using it for what you do, this makes your travel tax deductible because now the world becomes your content. The world becomes your setting. The world becomes your background. The world becomes your backdrop. All because you are a content creator and you're doing it in pursuit of a profit. You're doing it in pursuit of making more money. So once you understand this, then you think about things totally different. And this puts you in the driver's seat in terms of how you can fatten your refund, regardless of the tax codes and the government. Those things are cool. And those things can enhance what you already do. But once you know this, now you understand the importance of receipts equaling cash. It's the transactions and the things that you did last year that positions you to get a fatter refund this year. So let's dive into some of those things that are on the list of what could potentially make your refund larger, even though you didn't change your lifestyle any at all. Now, what I just gave you puts way more money in your pocket than what the government can give you. See, what I just gave you puts you in the driver's seat of just taking a different perspective of the money that you spend, the cards. Every time you swipe your card, you need to be thinking, how can this be tax deductible? How does this tie into me being more profitable in my business pursuits? When you think like that on every transaction, then you circulate money different. You find yourself not wanting to just pay for things that are not tax deductible or can't even be in the realm of tax deductions. You view circulation of money totally different. Well, at least I did. So the tax breaks that may make the biggest difference. While Congress made a bevy of tax changes for 2025, offering a new tax break on a car loan interest, tips and overtime pay, child tax credit, the expansion of 2 common tax breaks, and the introduction of a new one for seniors may account for the biggest increases in average refund this year. So a larger standard deduction. The standard deduction is taken by the vast majority of filers. Congress boosted it by $750 to $15,750 for single filers, and by $1,500, $31,500 for married couples filing jointly. So the standard deduction increases your refund because it lowers your tax liability. Now you're having to pay less taxes on the money that you made. So that can, help. And especially if you understand what the standard deduction can do from a standpoint of you paying your kids or hiring your kids into your business. That's a whole nother conversation. So what else can help your refund get bigger? An expanded SALT deduction. So this is basically state and local tax. So if you live in a high tax state, you will be allowed to deduct up to $40,000 in state and local taxes, either your income or sales tax, plus property taxes. This is up from $10,000 last year. That's pretty significant. So you can only claim the deduction if you itemize, though. That's very important. So if you take the standard deduction, then you can forget about this because it's one or the other. And most people don't itemize enough in order to qualify truly for the itemizations. They'd be better off just taking a standard deduction. But this can help. So the jump in how much you may deduct means it may make sense for more filers to itemize. It just depends. This change can be significant and often produces a noticeable refund increase, especially when withholding was not adjusted. So look at these things and see if it makes more sense for you to take the expanded tax deduction, and understand that your tax specialist should understand these things and tell you what's going to be the best fit for you. A new senior deduction. This is income restricted and limited to those filers who are 65 and older, but eligible senior citizens will be allowed to take special $6,000 deduction, $12,000 for joint filers, on top of either their standard deduction or itemized deductions. Check your withholdings, because you overpaying in taxes throughout the year may cause you to overpay in taxes, and this can contribute to a larger refund. And we teach people how to fill out the W-4. If you check some of our playlists, you'll see a W-4 playlist. But these are the main things that can make your refund larger. But if you listen to what I said in the middle of the video, where I talked about what can create tax deductions, now what you should be doing is scrambling to 2025 and looking at your transactions, looking at your activities and things you may have done that were centered around you having a side business, a side gig, a content creation business, e-commerce, whatever it is that you're doing online. Hopefully you're not just online killing time. Hopefully you're online figuring out ways to make life more profitable for you. Then you can be taking advantage of the money that you spent in 2025, turning those into tax deductions this year, so you can recoup portions of that money back in the form of a refund and lower tax liability. Hopefully this was valuable to you. And if so, show me some love down below. Share this with somebody who you feel may benefit. Mr. Smith, signing out. Salute.